Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. JP Morgan once said, "Millionaires don't need astrologers, but billionaires do," and so we began. Today is Tuesday, June 11th, 2024. In today's episode, we will bring up the 10-year auction today and the NFIB Optimism Index. Notably, tomorrow, CPI is coming out along with the Fed's rate decision, which has a 99% chance of no cut, according to Fed Funds Futures at the moment. And then Thursday, we have the PPI report. To start today's show, I want to bring up the NFIB May 2024 report, title being Small Business Uncertainty Index Reaches Highest Level Since 2020. So even though the Optimism Index reached the highest rating of the year in May at 90.5, this is still the 29th month in a row below the historical average of 98. So we're higher than usual, but still overall pretty low. While the Uncertainty Index rose 9 points to 85, the highest reading since November 2020, quite a little while ago. Now, I want to just bring up this little quote here as well from this article. The small business sector is responsible for the production of over 40% of GDP and employment, a crucial portion of the economy, said NFIB Chief Economist Bill Dunkelberg. But for 29 consecutive months, small business owners have expressed historically low optimism in their views about the future of business. Conditions are the worst level seen in 50 years. Small business owners need relief as inflation has not eased much on Main Street. So things are good and fear is high, but not according to what's going on in the markets, as we've seen in stocks, as we've seen in high yield corporate. Will it all be changing soon? I don't know. I guess we'll see. TNX 10-year note treasury yield. Sorry, this chart is a little messy. In the middle of the day today, the yield dropped pretty dramatically. It was actually up before 1 o'clock, and then when we had the 10-year note auction today, well, the market was expecting it to not do so well, and apparently it was a very strong auction, and that's what really drove yields to go down. Now, notably, on the 10-year note yield, the way I have this chart here, we have this sort of little head and shoulders that broke, and I'm counting this as a retest of this line, however messy it is. And if we get down to this target of that head and shoulders and break it, we have a longer term, larger head and shoulders that could send the 10-year note collapsing much further than anyone anticipates. But for now, nothing to see here, folks. The S&P 500 is at an all-time high. So there you go. Let's keep buying stocks, everybody says. But not everybody agrees. The CNN Fear and Greed Index notably dropped actually from yesterday from 47 to 46, all while the S&P 500 is going up higher. Now, if that's not a clue, I don't know what is. My crystal ball says quite clearly, markets going up right now is not being controlled by smart money. This is not smart money buying stocks right now. Certainly not the big indexes, the S&P 500 and the triple Qs. What seems like the truth now coming out, at least with smart money and high yield corporate bonds, is maybe we're just waiting for this inflation report to come out tomorrow, the CPI, and maybe the PPI on Thursday. I'm not sure, but this is continuing to just be so tight. You see, I don't know if you can even see it on your screen, but today's candle opened and closed exactly flat. Funny enough, coincidentally, the same exact flatness and same level as it was June 4th, so on Tuesday, last Tuesday. It's possible the CPI report will send things flying around and So we'll see. The main thing here is this news going to be good enough to, close the credit spread between guaranteed securities and higher yield securities? In other words, HYT can increase in value and give a lot of support to the equity markets, or not? Will something else happen? My crystal ball says, well, I think HYT, as I've been saying in previous shows, deserves to have a little bit more fear here. And I am the guy with a crystal ball. Never investment advice. I noted yesterday how DXY, the value of the dollar, had broken out so clearly and beautifully, and we went even higher in the dollar today. And I mentioned yesterday as well, with the S&P 500 showing strength, the same thing happened today. Stocks are going up, and yet the dollar is also going up. This is a divergence. This isn't supposed to happen. Stocks typically want to go up when the dollar is going down. If the dollar is really jumping up here, it doesn't really make sense for stocks to continue increasing in value either. I believe I mentioned this yesterday in TLT. This is a treasury bond fund hitting basically this trend line that I had drawn previously, almost exactly right on it. And I said, will this act as support? And it sure did. TLT had a very nice move up today. Next, we are going to look at wood, one of my favorite leading indicators of where stocks may be headed in the near short term. And we had a very large gap down in wood, all while the S&P 500 is making new all-time highs. Another divergence between what's going on in stocks and this leading indicator. Last main chart of today, the triple Qs, we're almost at my target. I had talked about getting to 470. I mean, I really can't believe it. I didn't, this inverse head and shoulders is actually playing out. We only need to go up $2 more, for our, if I was betting on this, I'd be out by now for sure. I would have gotten out somewhere back here probably if I was betting on this head and shoulders playing out, but I'm not a day trader, so but anyway, I'm just flabbergasted that we're here. We are here in the triple Qs. Amazing. Meanwhile, the investments that I'm excited about are falling apart here a little bit, in not just this one investment, rather. In EWZ, the Brazilian ETF, had a pretty big gap down today. I had drawn all of these trend lines thinking like, oh, for sure this is going to hold it up, and that yesterday, I didn't mention it in the show, but we were basically on this line. It just doesn't care about these lines at all, so I don't know what's going on here. I was hoping to get a little bit of an advantage in Brazilian equities using trend lines. One thing that lets me not get too worried about it is when you have a chart pattern going all the way back to 2011, as this one does, you don't really typically want to use a daily chart. You might want to use a weekly chart or even a monthly chart, because there's just not, these patterns. It's like trying to use a daily close pattern basically, and worrying about what's happening like every second, during the day. Like, that's what the tails are for. And so this can act as a tail. This actually can still be, a good time to get into Brazil. I mean, I think it is no matter what, just because the fundamentals work out. So many of these companies. I mean, what the biggest holding really of EWZ is PBR, I believe, Petróleo Brasilio or something like that. It has really low PE ratio, huge dividend. This company makes real money. It pays real money to the owners, which is you if you own the stock. It's just a matter of time for the valuation of Brazilian equities to make sense. Yeah, there's political risk, but I think the political risk, if I'm going to look into my crystal ball, the political risk will come in once this undervaluation period is over. Once we start to normalize and Brazil starts to feel really rich, that's when the politicians can come in and, um, do what politicians like to do. That's all for today's show. Watch out for that CPI report tomorrow. Hope you enjoyed. Thank you for watching. Robschild.